What if I told you the very thing you think you need more of, money, is the same thing that's silently destroying businesses, marriages, and lives every single day? Sounds insane, right? But hear me out. Every year, thousands of companies shut their doors, not because their products were bad, not because customers disappeared, not even because they lacked passion or talent. They died because they didn't know how to manage their money. Now here's the kicker. Some of these companies were generating millions in revenue, and yet they still went bankrupt. Meanwhile, a tiny startup with no office, no funding, and a barely working product somehow becomes a billion-dollar unicorn. How? Let me ask you something real. Have you ever met someone who said, "If I just had more money, I'd finally be successful"? Or watched a lottery winner go broke within a few years? Or seen a business raise millions in funding, only to disappear within months? Robert Kiyosaki says it best. It's not about how much money you make. It's about how well you manage what you have. And that's the painful truth no one wants to face. Money doesn't solve money problems. Financial intelligence does. So if you think wealth is about earning more, think again. Because in this video, we're pulling back the curtain on what truly separates businesses that build legacies from those that crash and burn in silence. This isn't just a lesson, it's a wake-up call. And by the time we're done, you'll never look at money or management the same way again. Money doesn't build empires. Financial intelligence does. And financial management, that's the heartbeat of every great business. From Tata to Tesla, from Infosys to Apple, the real difference between companies that thrive and those that die isn't just about what they sell, it's how they handle what they earn. So if you're serious about building something lasting, whether it's a business, a brand, or a legacy, then buckle up, because in this first phase, we're diving into the engine room of wealth, financial management, the secret weapon behind every legendary company. Let's dive in. Part 1. What is financial management? And why should you care? Financial management sounds like a boring corporate buzzword, but let's break it down the Kiyosaki style. Imagine your money is like water. Without a container, it spills. Without direction, it leaks. Without control, it floods and destroys. Financial management is the container, the dam, the irrigation system. It's the strategic planning, organizing, directing, and controlling of all money-related activities in a business. In simple terms, it answers 3 life-saving questions. 1. How do we get money? 2. Where should we put it? 3. How do we keep it from slipping through the cracks? It's like a GPS for your money, guiding you from point A, earning, to point B, building something meaningful without crashing along the way. Example, Tesla and the Model 3. When Elon Musk launched the Model 3, Tesla wasn't just building cars, they were building an empire. To make it happen, they needed to raise billions in funding, build massive factories, hire skilled labor, manage skyrocketing production costs. And guess what? If they had mishandled the money, even slightly, the whole thing could have exploded like a battery on fire. It wasn't just Elon's vision that kept the company afloat. It was the financial management behind the scenes that made it sustainable. Part 2. The 4 core objectives of financial management. Kiyosaki often says, the goal is not just to be rich, it's to be free. And financial freedom, especially in business, comes down to mastering 4 core pillars. The first is profitability and wealth maximization. It's not just about making money, it's about growing it sustainably. Financial management ensures your company isn't just earning, but earning wisely. Kiyosaki warns us, too many people chase income, not assets. This principle applies to companies too. It's not how big the paycheck is, it's what you do with it. 2. Proper utilization of funds. Think of money like fuel. Would you pour premium petrol into a leaking tank? That's what most businesses do, waste money without direction. Financial management patches the leaks and ensures every dollar goes where it delivers the highest return. 3. Ensuring liquidity. Liquidity is equal to cash on hand. No matter how profitable you are, if you can't pay salaries next month, you're done. It's like owning a mansion but not having money to fix a leaking roof. Liquidity keeps the lights on, literally. 4. Financial discipline. Here's the brutal truth Kiyosaki drives home. Lack of discipline is the root cause of poverty. Overspending, poor budgeting, emotional decisions. These are silent killers. Example, Infosys. Discipline in action. Infosys, one of India's tech titans, didn't rise by accident. They maintained high liquidity, avoided unnecessary risk, and reinvested wisely. During market crashes, they didn't panic, they pivoted, because they had financial discipline. Narayana Murthy, Infosys founder, once said, "Progress is often equal to the difference between mind and mindset." In business terms, revenue is nice, but discipline is what keeps the doors open. Part 3. Why financial management is more important than ever. Every single business, from a roadside tea stall to a Fortune 500 tech giant, needs one thing to survive, which is money control. Let's break down why this matters deeply. 1. Smart capital allocation. Should you invest in marketing, new tech, more staff, or better systems? Without financial management, you're just guessing. It ensures that every rupee, dollar, or pound is put in the highest impact place. 2. Financial planning. Want to survive the next recession, economic crash, or market disruption? Financial planning prepares you for the storm before it hits. Just like Noah didn't build the ark after the rain started, businesses must plan for worst-case scenarios in advance. 3. Risk management. Kiyosaki teaches, the rich don't avoid risk, they manage it. Financial management identifies threats early and builds buffers before they become disasters. 4. Better decisions. From launching a product to expanding overseas, you can't trust your gut alone. You need numbers, data, insight. That's what financial management delivers. 5. Creating shareholder value. In the long run, a business isn't judged by how cool it is, but how much value it delivers to its stakeholders. Dividends, stock appreciation, long-term growth, all of that stems from strong financial systems. Example, Zomato's IPO. When Zomato went public, it wasn't just about food delivery. Behind the scenes, their financial management team was busy auditing accounts, building investor confidence, forecasting future earnings, complying with strict regulations. The IPO wasn't luck, it was orchestrated discipline. Part 4. The 4 types of financial management. Robert Kiyosaki breaks down wealth into buckets of decisions. And in business, these fall into 4 major categories. 1. Investment decisions. Capital budgeting. Where do we put our money to get the highest returns? More R&D, new factories, global expansion. Example, Apple choosing to double down on AI instead of opening more physical stores. That's investment decision-making. 2. Financing decisions. Should we raise money through debt, equity, or both? Example, Reliance sold stakes in Jio to Google and Facebook. They didn't borrow, they partnered. That's financial strategy at its finest. 3. Dividend decisions. How much profit should we reinvest versus share with investors? Example, TCS pays steady dividends every year because trust builds loyalty and loyalty builds market value. 4. Liquidity decisions. Do we have enough cash to keep the business running smoothly? Cash flow isn't just a spreadsheet metric, it's the life support system of a business. Part 5. The 3 core functions of financial management. If financial management were a machine, it would run on these 3 powerful engines. 1. Financial planning. Forecasting future money needs, estimating capital requirements, and setting up the right funding mix. Example, smart startups create 3 meters and 5-year projections before they even approach investors. They don't guess, they plan. 2. Financial control, budgeting, monitoring, auditing. Example, Maruti Suzuki dominates because they control costs religiously. No rupee is left untracked. 3. Financial decision-making. What to invest in, where to raise capital from, how to share profits. Example, is Apple buying back its own shares? That's a bold, calculated decision rooted in deep financial intelligence. If you're watching this and realizing that money isn't the goal, control over money is, then you're already ahead of 90% of people. Financial management is not just for CEOs, it's for anyone who wants to stop living paycheck to paycheck and start building something meaningful. And in the wise words of Robert Kiyosaki, it's not your salary that makes you rich, it's your spending habits. So whether you're running a small business, launching a startup, or just learning to manage your own finances, remember the game is not to earn more. The game is to manage better. If you're getting value from this, do well to like this video and subscribe to the channel for more powerful nuggets on wealth and management. Let's keep going. In today's fast-moving world, what separates winners from whiners isn't how much they make, it's how well they manage what they have. And that's where phase 2 begins. This is not just about business. This is about how companies like Apple, Amazon and Infosys became global giants, not just because of products, but because of how they measured, forecasted, invested and protected their money. Welcome to Infinite Assets, where you turn chaos into clarity and revenue into real wealth. Part 6. Tools of Financial Management. The CFO's Toolkit. Ever tried building a house with your bare hands? Exactly. In business, you need tools, sharp, precise and powerful ones, to make smart financial decisions. These tools aren't optional. They're essential. Here's what every financially intelligent business uses. Financial ratios. ROI, return on investment, debt-to-equity ratio, net profit margin. These numbers are like blood pressure readings for a business. Quick insights into health, risk and performance. Cash flow statements. Because profit is nice, but cash is oxygen. You can't survive without it. Break-even analysis. Want to know when your business starts making real money? This tool tells you exactly how many units you need to sell before the profit begins. Budget planning software. Tools like QuickBooks and Zoho Books let you track every penny, like a smart wallet with X-ray vision. ERP systems, SAP, Oracle. These are like command centers, managing finance, inventory, supply chains and more, all under one digital roof. Example, Amazon. Amazon doesn't guess when setting prices or negotiating supplier contracts. They use powerful financial modeling and AI tools to predict demand, cut costs and optimize every decision. Part 7. The role of the financial manager, the silent strategist. You might think of a financial manager as just a bean counter, right? Think again. A great financial manager, or CFO, is not just an accountant. They're the financial architect, the strategist, the ship captain. While others chase shiny ideas, the financial manager ensures the ship stays afloat, even in a storm. Here's what they do. Ensure adequate capital. You can't scale with broken pockets. Manage funds wisely, investing where returns are real, not emotional. Monitor cash flow, because timing is everything. Minimize cost of capital, getting the best money at the lowest price. Ensure compliance. No one wants a lawsuit surprise. Example, Ruth Porat, CFO of Google. Known for her tough financial discipline, Porat helped Alphabet stay profitable, even when the global economy dipped. Not just by cutting costs, but by making smarter bets and controlling financial chaos like a pro. Part 8. The principles that govern every dollar. Robert Kiyosaki always emphasizes financial rules, because without principles, you're just gambling. Here are the 5 unshakable principles of financial management. 1. Risk-return trade-off. Higher returns, higher risks. Smart managers don't avoid risk, they balance it. 2. Time value of money. $1 today is worth more than $1 next year. Why? Because you can invest today's dollar and make it grow. 3. Profitability versus liquidity. Profit looks great on paper, but if you can't pay your bills tomorrow, your profits are just a fantasy. Balance both. 4. Principle of matching. Use short-term money for short-term needs, like inventory. Use long-term loans for long-term projects, like factories. Mismatch is equal to a cash flow crisis. 5. Diversification. Don't bet the farm on one crop. Spread your risk across markets, sources of income, and investments. Example, Apple. Apple doesn't just sell phones, they hold a diversified investment portfolio, including bonds, global assets, and cash reserves, so they stay stable even when the markets shake. Part 9. Personal Financial Management. CFO Your Life. This isn't just for CEOs. Kiyosaki teaches that everyone needs to become the CFO of their own life. Here's how to start. Budget your income. Every dollar must have a job. Avoid impulse spending. Credit cards are not candy. Build an emergency fund. 3 to 6 months of expenses minimum. Invest early and wisely. FDs, SIPs, mutual funds. Plan for retirement, because working forever is not the dream. Example, the $50,000 rule. Let's say you earn $50,000 per month. Break it down like this. 20% savings is equal to $10,000. 30% investments is equal to $15,000. 50% living expenses is equal to $25,000. With conscious spending, use apps like Money Control, SIA, or ET Money to track your spending like a corporate CFO tracks their balance sheet. This is how ordinary income turns into extraordinary results. If this hits home, if you're realizing that managing your own finances is just as critical as running a company, then don't just sit with the knowledge. Hit that like button so more people can wake up to this truth. And subscribe right now, because the next lesson might be the one that changes your financial future forever. We're not just talking about money here, we're building the mindset of millionaires, one principle at a time. So if you're ready to stop living paycheck to paycheck and start thinking like your own CFO, then click subscribe and let's keep growing together. Part 10. Challenges in Financial Management. The real-world obstacles. Even with all the right tools, the road isn't smooth. Here are the landmines every financial manager faces. Fluctuating market conditions, rising cost of capital, inflation and currency risks, regulatory changes, poor forecasting, fraud and financial misreporting. Example, COVID-19 collapse. Even giants like Air India and Jet Airways faced financial freefall, not due to lack of customers, but due to poor cash management and high debt. In a crisis, financial strength matters more than brand strength. Part 11. Modern Trends in Financial Management. The future is now. Robert Kiyosaki always talks about adapting to the new rules of money. Here's how the financial game is evolving today. AI for forecasting, blockchain for secure transactions, ESG investing, environment, social, governance, crowdfunding for raising capital, fintech collaborations, real-time dashboards for instant insights. Example, Nycar. By using real-time data analytics, Nycar predicted festive demand and scaled up efficiently, avoiding overstock and increasing profits. This is financial foresight in action. Part 12. Financial management across industries. Different industries is equal to different rules of the game. Here's how financial focus shifts depending on your sector. Manufacturing. There is capital budgeting, cost control, inventory efficiency. Banking. We have liquidity management, risk mitigation, compliance. IT sector. We have investment in R&D, employee costs, global taxation structures. Services. We have time tracking, personnel management, resource allocation. Example, Infosys. Infosys splits its financial team into project, international, and payroll departments to make smarter global decisions and maintain efficiency across borders. Let's bring it all together. Financial management is not just about tracking money, it's about directing it. It's about measuring outcomes, predicting problems, making intelligent decisions, fueling growth while avoiding ruin. As Peter Drucker said, what gets measured gets managed. And Robert Kiyosaki would add, what gets managed builds wealth. If you want to thrive, not just survive in business or in life, master your money. Be the CEO of your business, but never forget to be the CFO of your decisions. If this helped you see money from a whole new angle, drop a comment below. I won't just earn money, I'll manage it like a millionaire. Hit that like button, Share it with a friend who needs this. And subscribe for more soul-shifting financial wisdom. Until next time, stay sharp, stay smart, and stay financially free. Thanks for watching. We appreciate you.